So this is part 4 of this 5 breakout chart examples video series. In this part, I want to talk about this base, the colors in this base, why are they important, and the relationship of these colors with the yellow line and the closing price just before the breakout. Remember that yellow line is our actual buy point, the buy price on the daily time frame chart. Okay. So basically, what I have done is I have divided the entire base into 4 different quarters. So 25%, which is the green zone, the topmost quarter, 25% the blue zone, which is the second quarter, and the bottom 50%, which is the lower half of the base. Okay. So the yellow line, which we have identified as our buy point after counting the points inside the base, the yellow line has to be inside the upper half, not the lower half. If the yellow line is in the red zone, I am not buying that stock. It's as simple as that. Why? Because of overhead supply. Okay, there are people who have bought the stock here, they might be wanting to sell the stock. So if the price is drifting down and the yellow line comes inside the red zone, I am not buying the stock. So remember, very important rule, the yellow line has to be in the upper half of the base to be on the safer side. Now, I don't have time to discuss overhead supply. I have made multiple videos previously on this channel where I discuss overhead supply and retail supply separately in 2 different videos. So it's because of overhead supply that the yellow line has to be in the upper half of the base. That's number one. Number two, the upper half is divided into green zone and the blue zone, which are the same heights basically. If the yellow line is in the green zone, okay, we are closer to this 52-week high or the all-time high. So the closer the yellow line is to this high, the lesser is the overhead supply, the lesser is the supply side pressure, the lesser is the risk. So if the yellow line is in the green zone, it is it is relatively safer than a base where the yellow line is in the blue zone. So yellow line in green zone is a safer buy point relatively than yellow line in the blue zone. So first thing you need to understand, yellow line has to be in upper half. Second thing you need to understand that if the yellow line is in the green zone, then it is relatively safer than a stock in whose base the yellow line is in the blue zone. Okay. So now you understood the yellow line. Apart from the yellow line, there is this closing price. So just before the stock breaks out, look at the latest candle. Where is the closing price? Okay. That closing price preferably should be above the red zone. Okay. We don't want to buy stocks coming out of the red zone. Okay. Preferably, we want to buy stocks coming out of the blue or the green zone. So this just before the breakout, that closing price of this candle has to be in the upper half. That is preferable. Okay. Yellow line in the upper half is non-negotiable. Okay. Closing price in the upper half is still negotiable. To be on the safer side, we will look for stocks which are where the closing price of the candle just before the breakout is in the upper half as well. That is, we are putting the odds in our favor when we uh, apply that, when we impose that criteria on ourselves. Okay. So both the closing price and the yellow line should be in the upper half. Now for tightness, if the yellow line is in the blue zone, I want the closing price to be in the blue zone as well so that it shows tightness in the right side of the base, which indicates reduction in the retail supply. Remember what I told in the first part, the chart is the effect, it is not the cause. You need to understand what is happening behind the curtain. So if the yellow line is in the blue zone, I want that closing price to be in the blue zone as well to get that tightness. Normally what happens is the yellow line is in the blue zone, but the closing price is in the red zone. So first I have to cross the red zone, then enter the blue zone, then break out the yellow line, and then cross the green zone to come out of the base. It is asking too much from the stock. That is not tightness, that is volatility. Okay. We want tightness inside the base. Look at this example. Both the yellow line and the closing price are in the blue zone. That's tightness. And look at the breakout, 20 short of 20% in a single day. Okay. Similarly, if the yellow line is in the green zone, we preferably want the closing price just before the breakout to be in the green zone as well. Okay. That is again represents tightness. And that pattern is far safer than this pattern, even where both the lines are in the uh, blue zone. Okay. The closing price is also a line basically. So look for both the yellow line and the closing price to be in the same color. Okay, except the red color. Okay, in the same color. That represents tightness. Now, sometimes what happens is, let's look at the next. See, in this case, the yellow line is in the green zone, but the closing price is in the blue zone. Okay. Now, that is still okay if both these lines were in the blue zone, right? That is still tightness. In this case, the two lines are in different colors, but at least it is safer than both the lines being in the blue zone, correct? So first level could be both the lines are in the blue zone. Second level of safety could be the yellow line is in the green zone, the closing price is in the blue zone. Third level of safety could be both the lines are in the green zone, correct? It's very, very simple. It's not rocket science, okay? And the if the yellow line is in the blue zone, closing price is in the red zone, that is too risky. I mean, that I wouldn't call it even safe. Okay, that is too risky. So remember these important points that I have been discussing. See, even with this combination, the stock breakout. Next example. Look at this. The yellow line is in the green zone, and the closing price of the latest candle just before the breakout is in the green zone. Okay, both are in the green zone. Stock shot up like 18% in a single day, 19% single day. See, in this case, the yellow line is in the blue zone, closing price is in the blue zone. Okay, tightness, stock shot up 85% in less than 3 weeks. Here, the yellow line is in the green zone, closing price of the latest candle before the breakout is in the blue zone. Not ideal, but still relatively safer than if the price were in the red zone. So now you understand why I am using these color combinations. I recommend that you use the same color combinations that I am using on my chart. You use the same layout, the blue, green, red moving averages, the volume blue line moving average, the blue, the green, the blue, and the red zones on the base, so that you understand what I am saying here. You can use any colors you want as long as you understand what you are doing. Okay. And remember the distance, the height of the green zone and the height of the blue zone should be the same. Okay. Sometimes, since people use Fibonacci to draw this, sometimes this green zone could be slightly smaller than the blue zone. So don't do that. Make sure your settings are correct. There is a video on my channel about the base color. Just type base color. You will find that video. In that I explain how to set up these uh, color combinations. You can quickly draw a base. You just hit here and you draw a base like this. It's very simple. Okay. Anyways, so now you understand the relationship between the green zone and the blue zone with the yellow line and the closing price line. Very, very important. Another important thing, what is a technically strong stock? Okay. If the yellow line is in the blue zone, we expect at least 6 points in the base. Remember, our criteria is blue, green, red, 10 candles, 4 points. For additional safety, we want minimum 6 points in the base if the yellow line is in the blue zone. We want minimum 4 points in the base if the yellow line is in the green zone. 4 points are allowed because we are getting closer to the 52-week high or the all-time high or zero point 0.1 inside the base. If there are 6 points in the base and the yellow line is in the green zone, that is like the icing on the cake. If there are 8 points in the base and the yellow line is in the green zone, that is like icing on the cake. Okay, so you understand where I am going with this. We have to put the odds in our favor. So when you look at a base, you understand the quality of the base by looking at the colors, combining them with where the yellow line and the closing price is. That gives you the relative level of safety of that base. So if there are 6 points in the base and the yellow line is in the green zone, you don't want to miss out on that stock. You might want to put partial number of shares as a GTT order because that stock could break out very fast. So depending on the quality of the base, I decide how I want to execute the trade. If it's a very high quality base and I want to buy 100 shares of the stock and I'm afraid that the stock might shoot up very fast, I might put in 25 or 50 shares as an automatic buy order. The remaining 50 shares I could buy with a market order. So this has got implications on how you are going to execute your trade. Very, very important. That is why I am discussing these colors with you. So, a technically strong stock is a stock which has got 6 points in the base and the yellow line is in the blue zone. If the yellow line is in the blue zone and there are only 4 points in the base, that is not a technically strong stock. It doesn't matter whether it's a swing trade or a positional trade. It doesn't matter whether the market condition are a confirmed uptrend or rally attempt or uptrend under pressure. The technical strength is dependent on number of points in the base and in which color the yellow line and the closing price are. Because some subscribers, what they are doing is, since the market is in confirmed uptrend, they are accepting that okay, 4 points in the base, blue zone, yellow line, it's okay to take the trade. No, no. Please go with technically strong stocks. Even if the market is in a confirmed uptrend, you are putting the odds in your favor by only choosing to go with technically strong stocks. Okay. So be strict with your trading system. It will help you. Okay. Thank you so much.